$5.5 trillion worth of options are set to expire. Today, it is triple witching. What does that mean with a background of risk as it stands at the moment, record after record in the equity market? Simon White is with me. So, Simon, this is about indexes, this is about stocks and ETFs. What is and how important is triple witching?
I think it's one of these things that if you are a market practitioner, it's obviously very important. But I think if you are a slightly longer term investor, then you may not notice it because the volatility can happen at the end of the day. It can then often be reversed, if the price move the week after. So again, it depends kind of who you are. I think it's a shorter term thing often. I think it does affect the market further out, into the next quarter because, say in this situation, what you have is a lot of what they call gamma rolling off the books. Now, gamma, all you really need to know about that is when there's lots of gamma, the people that the other side of these options, they have to hedge that gamma, and that tends to repress the volatility of the market. So the market tends not to, have big sort of lurches. It might do on an intraday basis, but on a day-to-day basis, it doesn't tend to do that. So potentially with this larger amount than normal, I think, of gamma coming off, maybe over the next few weeks, you could see a bit more volatility. But that doesn't necessarily mean which direction, which the price is going to go in. But there will be probably more volatility on the back of that. So that's really the main takeaway. I think there's other things that are more important for investors, and like liquidity, and it's going to have much more of an impact on longer term price.
It's interesting. I mean, just on that, there's such a mountain of calls relative to puts in this triple witching. I think that's in the story. Nancy Tengler was just with me there talking about, when the hedges go away, this liquidity may change in these markets. And the one thing that she warned about is chasing this market. Now, you talk about liquidity in your next column, in your latest column, and I love the phrase, the irrepressible wave of liquidity. Will this environment persist, or when the hedges go to the Hamptons, might it materially change? Or the south of France, if you're in Europe?
Exactly. Potentially. I think, look, there's that kind of liquidity, there's that market liquidity. Then there's what I call excess liquidity, which works over longer periods of time, like, 6 months and that sort of time period. There's also central bank liquidity as well. And I think that's quite important right now because when I say central bank liquidity, I mean the bank reserves of the Federal Reserve. And right now we are in tax repayment season. So basically the Treasury account at the Fed has started to rise. So basically people are paying back their taxes. That takes reserves out of the system, and until the Treasury decides to spend them, that actually takes liquidity out of the system. So over the very short term period, you could see some pressure on prices from that.